Hello, everybody. I'm Natalie Brunell. Thank you so much for checking out my show, where I get to hear from the leading voices in Bitcoin, financial markets, political structures, philosophy, and more. Please make sure you're subscribed to the show. And if you're watching this on YouTube, like this video so more people see it and hit that notifications button so you don't miss out on any new content. This podcast does not provide financial advice. It is for educational and entertainment purposes only. So make sure you always do your own research before making any financial decisions and be aware of your risk tolerance. I'm able to produce this show thanks to my sponsors, and I'm very picky about who I choose to partner with. So I hope you'll take the time to listen to the ad reads throughout the show. All right, now to my main partner, Swan Bitcoin. I'm proud to partner with Swan because it is a Bitcoin-only company focused on helping people save for their future and self-custody their Bitcoin, not trade it. Swan offers a private client service, retirement planning, tax loss harvesting, and even home equity conversion. Swan is also committed to educating millions of future Bitcoiners through free educational resources and media projects. I actually use Swan to dollar cost average every day. I deposit a little bit every day that's equivalent to what I might spend on a meal, because I actually read that dollar cost averaging daily ends up with a lower cost basis than weekly or bi-monthly at the end of a given year. Swan also produces my show, Hard Money, which reports on Bitcoin adoption and macro trends around the world. So make sure to subscribe to that as well. And to learn more and get $10 in free Bitcoin when you sign up, head to swanbitcoin.com/Natalie Brunell. All right, it's time for the show. Welcome back to another episode of Coin Stories. I'm excited to have with me today Caitlin Long, CEO of Custodia Bank. We're going to be talking a lot about what's happening with the regulation and her bank application to be a member bank of the Federal Reserve, what happened there and some of the corruption that exists between Washington, D.C. and this emerging ecosystem. So Caitlin, thank you so much for coming back on the show.
It's great to be on. Thanks. Good to see you again.
All right, let's start a little bit with your bank, because the last time that you were here on the show, you were talking about Avanti. Avanti is now Custodia. And I know that you've been working on essentially solving the US dollar problem and bringing more capacity to this emerging economic ecosystem. So can you talk a little bit about, for people not familiar, what is Custodia? And we'll get obviously into what's recently happened.
It's a bridge to bridge the traditional banking system with the digital assets ecosystem, Bitcoin especially, but also a little bit broader than that. And it's designed to do it in a way that hurts neither side. And we've seen a lot of the hurt that both sides can do to each other in the past year, both the crypto causing problems for parts of the traditional banking industry, as well as the traditional banking industry hurting crypto because of the lack of US dollar banking services. And Custodia Bank, and indeed the general Wyoming Special Purpose Depository Institution charter, is designed to safely bridge the two. And unfortunately, we've been rebuffed by Washington, D.C. in a rather curious way that certainly confirms that politics has entered. We were all in one day attacked by the White House, the Federal Reserve Board of Governors, the Kansas City Federal Reserve, and then 2 days later, the Majority Whip of the US Senate, Dick Durbin, came over the top to attack us by name, which is all rather amusing considering Custodia is not even operating yet.
Wow. Yeah. And it must have been frustrating because you were essentially conflated with the FTXs and the scammers, but you were simultaneously always calling them out. You've been on stages with Sam Bankman-Fried and with Alex Mashinsky on panels warning about the problems with leverage and with essentially vapor tokens that are nothing more than counterfeit money. So maybe can you talk a little bit about some of the warnings that you were offering to federal officials that may have prevented something like this collapse that we saw?
Well, certainly publicly, you're right. I was warning, and I know the federal officials were watching, and they were, to be honest, taking it into consideration. There was a speech made by the acting comptroller of the OCC, which is the federal bank regulatory agency, that actually referenced my work back in April of last year, which was great. It does indicate that the warnings were being heeded and listened to in the right places, in the right way, and for the right reasons. Privately, though, what I was doing, I did disclose last Friday that I personally handed over evidence to law enforcement of probable crimes committed by one of the big crypto frauds. and literally tried to help law enforcement move against them. And I respect law enforcement. Some folks have asked, why has that not come out sooner? I respect the investigations that are happening behind the scenes, and I do believe that they will succeed. And then I also privately was warning the bank regulators about the liquidity risk and the bank runs that were going to happen. It just came out yesterday in the FDIC's Office of Inspector General report. There were 136 banks serving the crypto industry. This was not a small number of banks, which is interesting in the context of Custodia's denial for asking to do the exact same thing that 136 banks are already doing. But interestingly, that report disclosed something explosive, which is that 11 banks were involved in suspected wire fraud involving FTX. And that is fascinating because that is a regulatory oversight that that the bank regulators should have caught, should have understood. And they certainly had ample warning behind the scenes from folks like me.
Well, why do you think they didn't take action when they got these warnings? Why wasn't this a situation that was prevented? And instead, we learned that not only were millions of dollars lost, but there were hundreds of payments to political donations. And it seems like Sam Bankman-Fried had easier access to the Oval Office than many people who are even in Washington, D.C.
Right. And to Jay Powell as well. That's a really good question. Why is it that the so-called crypto bros got all this access? And I've disclosed that in spite of the fact that I was behind the scenes doing all this work to help the folks, the good guys, so to speak, clean up the fraud in this industry, both behind the scenes and overtly, as you point out. And we were the proverbial messenger that got shot. I don't know why. And I think light needs to shine in some dark corners as to what really happened here. Why is it that Sam Bankman-Fried got all that access and folks like me were stuck in the bowels of the bureaucracy? And I'm not alone. I'm not the only one who was trying to help expose some of the crimes that were being committed by the scammers in this industry. And good riddance to all of them. May they all end up in jail, and good luck to law enforcement to bring those criminals to heed. I'm glad to see the worst elements of crypto being burned down. The market right now is taking care of it. And definitely regulators were late to the table. Just this morning, there's a new joint agency statement by the 3 federal banking agencies about the risk of serving the crypto industry, and essentially saying, due to the liquidity risk, the bank should be sitting 100% in cash. Well, that's something that literally our business model was, not just 100% in cash. It was 108% in cash. We propose to keep 108 cents for every dollar of demand deposits in our master account at the Fed. And the one bank that we know was already complying with the new guidance this morning is the one that got proverbially shot, and by the White House and the Federal Reserve and the Kansas City Federal Reserve and Senator Durbin. So again, big questions need to be asked here.
Okay, I want to sort of clarify some of the aspects of this industry, because it can be very confusing. And I think a lot of people have become familiar, at least if you are an investor in Bitcoin or crypto, with Silvergate and Signature Bank, which were sort of the 2 entities that were involved and provided an avenue for the crypto platforms to essentially be connected to the traditional banking system, right? And Custodia, as you just mentioned, it's pretty much unheard of to have a bank that actually has reserves 1-to-1, much less $1.08 for every dollar, like you said. We have fractional reserve banking, which has created so many of the problems, and essentially it's money created out of thin air that's not backed. And thank goodness we don't have these bank runs, because every bank is insolvent, right? We are insolvent. That's what's so crazy about our whole economic system when you really dig in. But can you kind of help us understand, especially for viewers that are coming into this, saying how does a platform, whether they're a crypto exchange that does all sorts of different tokens, or they're Bitcoin only, how do they connect to the banking system? Because unfortunately right now we do need that on-ramp, and we don't want it to be blocked by regulators that are misinformed. We need to be able to convert our fiat currency and our dollars into Bitcoin. So how does it work? Like, what did Custodia do? What kind of application did it need to file that was ultimately obviously rejected?
Yes. So we got a charter from the Wyoming Division of Banking in October 2020, immediately applied for what's called a master account, which is a bank account for banks at the Fed.
At the Fed.
Okay. In October 2020, at the Kansas City Fed specifically. And then we applied to become a Fed member bank in August 2021, all with the business plan of creating a safe and sound bridge. In other words, not taking the liquidity risk that the bank regulators just warned about this morning, and creating a bank that was specifically designed to bridge these two financial systems, the traditional banking system and the digital asset ecosystem, in a way that didn't hurt the other. Again, that was our goal. It was a first do no harm from one to the other, and vice versa. And unfortunately, we've seen that as you point out, the business model that really is the only business model in our opinion that actually makes sense. Keep 100% of customer demand deposits in cash in a Fed master account if this is going to be the customer base that you're going to serve. That business model was rejected. But it is so interesting because if you read through the lines of the OIG report from the FDIC that came out yesterday, as well as the new interagency guidance, that they want the banks to sit 100% in cash, because these deposits can be so volatile. They all literally can be withdrawn in the span of minutes.
Right.
So from a risk management perspective, the banks really have to invest 100% in cash, because all of the demand deposits attributable to crypto customers can disappear in the span of minutes. That's how fast things move. And it's a volatile industry. And we understood that from the get-go and approached the Fed with that business model. And you saw how the Fed handled us, unfortunately.
All right. So just breaking it down a little bit more, why do you have to file one of these applications in order to be, why would you want to be part of the Federal Reserve System? And are there essentially a ton of banks that are operating outside of it, which I'm assuming is a part of the problem? So many are offshore. It's very opaque. And here you wanted to be essentially a regulated, legitimate entity so that people could trust where they were putting their money. But can you break that down? Because I think it's a little bit confusing. Most people, before Bitcoin, I didn't even know that there were these banks that were attached to the Federal Reserve, and the whole system can get so confusing.
Well, so let's go back to in U.S. history. This is so interesting because in the beginning of the U.S., there was no central bank.
Right.
There was no Federal Reserve, and only the states chartered banks. And really, it came from the wildcat banking era, where essentially any business could call itself a bank. Originally, it started when gold was money, and the banks were just money warehouses. Mm-hmm. And you got a warehouse receipt, and some of the banks were dishonest. Most were honest because markets worked, but some of the banks were dishonest. And so regulation came in, and ultimately the state started to provide charters that required the banks to be honest and to be solvent and to be well capitalized, so that if the customer wanted their gold back, the bank had to give it back. And then the United States, because of some of the panics, because in parts there were fraudsters in the banking industry. The Panic of 1907 in particular was what ushered in the Federal Reserve. It's the first piece of federalization of the banking industry. But a deal got cut between the states and the federal government back then that said, okay, we're going to decentralize the Fed. There are going to be 12 different district banks, and they're going to be independent from the Board of Governors in Washington, D.C. And Washington, D.C. is not going to tell these 12 different regional banks how to do their business. And those are private entities. They were special, essentially public-private hybrids. And then ultimately what happened in the New Deal era, you saw a true federalization of banking, with the FDIC having to come into play. And ever since then, there's been this creeping federalization of banking in the United States. And it essentially reached its nadir in the Obama administration during something called Operation Choke Point, that started out as the federal government, especially the FDIC, making a move against industries that the Obama administration deemed unworthy, politically incorrect, however you want to describe it. It started with the payday lenders, and it ultimately moved to 30 different industries, including a lot of red state type industries like firearms, like coal, like oil and gas, like adult entertainment, like the cannabis industry. It was, but mostly politically incorrect industries that the Obama administration did not like. And what happened was the bank regulators discovered that they actually had the power to cause the banks to debank those industries. And it's not through explicit policy. They will always say, oh, these industries are lawful. The banks can bank them. But what's really going on behind the scenes is that the regulators during bank exams are saying, well, the management team is willing to take reputation risk to service a high risk industry. And so we're going to ding you on your examination score, and we're going to increase your FDIC insurance premiums, or we're going to reduce your what's called cap rate at the Fed, the ability for you to be overdrawn at the Fed. Or we're going to prevent you from doing mergers and acquisitions, or we're going to prevent you from getting into new business lines. So those are the subtle clubs that happen behind the scene where the bank regulators can force the banks implicitly, without explicitly saying so, to stop serving the industries they don't like. And it is an abuse of power. And the Trump administration put a stop to it, but it never really stopped, because on the ground, the way that the bank regulatory structure works, there's something called the CAMEL score. M in the CAMEL score, it's an acronym, is the management rating, and it's subjective, and the examiners can always decide if this bank is serving industries they don't like, then they'll ding the M in the CAMEL score, and that has all those knock-on effects. And this is why you see this insidious and subtle debanking of a lot of the industries that are deemed politically incorrect by Washington.
Oh, you mean we don't have free markets, Caitlin? I'm shocked to hear you say that. No, but
oh boy, no.
It's really interesting, because in our last episode, you were actually warning about a debanking that was coming, and really that a lot of that has come to fruition. But just to kind of go back one step again, so Custodia, what is the advantage to essentially trying to operate within this system? Is it just something you have to do in order to provide US dollars and liquidity to the market? Why are a lot of banks operating essentially in the shadows outside of it? Like what can you talk a little bit about that process of actually applying and how much power they wield to be able to say no to you and cut you off? And now you're learning a lot of things about why they may have done that.
Well, they certainly had the power to make the decision, for sure. That's the chartering authority. The Wyoming Division of Banking gave us our charter and was fine with our business model. That was a public 9-month process of vetting, extensive. I think our business plan was 800 pages. We all went through background investigations.
Wow.
And a significant amount of work done by the examiners to understand, is this a business model that will succeed? It's really when we got to the Federal Reserve that things started to change, shall we say? And it started actually with when we applied with the Kansas City Federal Reserve, because there are statutory requirements that all depository institutions that are eligible for a master account shall receive those services. And so there are issues with respect to the agencies broadly, not just the Federal Reserve, but the agencies broadly, going well beyond their statutory authority, literally just ignoring the law in a lot of cases here in the move that's been made against crypto, and not living up to their statutory requirements. And what ends up happening is when Congress is divided, as it is now, or even but before the last Congress, when you had the White House and Congress all in the same political party, they still couldn't figure it out. So Congress isn't going to come to the rescue here. It's really going to end up in the infinite wisdom of the founding fathers of this country. It's the judicial branch, which is an equal branch of government, that is likely to push back on all this agency overreach coming out of Washington, D.C. But back to your question on the banks. Are there banks in the shadows? Yes. When I saw there were 136 banks serving the crypto industry, I was floored. I figured there was a handful, but not 136. And so that does suggest that the banking agencies, that this got away from them a lot more than they knew. There was a lot more activity going on inside the banking industry than they knew. You also asked about offshore banks. And this is interesting because part of this industry, this is global, right? If we step back and think, what is going on with this technology? It's just code. Anyone with an internet connection can run that code. And guess what? Thanks to the Lightning Network, we have the ability now, all of us, 8 billion human beings on this planet Earth, have the ability to create and use US dollars on our phone. And there will be others other networks, but right now the Lightning Network is the one where you can literally move any fiat currency in the world using Lightning as an intermediary. Essentially, you don't need a bank anymore. And that can be done simply by running code. Okay, so that's right now it's small, but I think it's a question of if not when that tips and becomes very meaningful. And then the whole question of what is the banking industry raison d'etre becomes a very real question, because people, just like with Uber and the taxi and limousine commissions, once they understand that you can move US dollars at the speed of light and for essentially zero cost, they're going to wonder, why would we bother with a bank anymore? Right. And it's going to change a lot of things. But your point is well taken, that there are offshore banks right now serving US dollars. So why am I talking about a traditional bank in the context of this technology, which enables us not to need banks anymore? The answer is it's still nascent. This technology still has a lot of infrastructure build that has to be made. And I'm a long-term Bitcoin maxi, and I believe Bitcoin will become a world reserve currency. By the way, in conjunction with the US dollar, it's not going to necessarily dethrone the US dollar. It's just going to become something else, essentially a cross currency for foreign exchange transactions. And I think it's going to happen gradually and then suddenly. This is the sort of thing that is very small right now. That's why I find it rather amusing that Washington came guns blazing against a company like Custodia and shot a bazooka at a bunny rabbit, because we are tiny. We're not even operating. Why were they so afraid of us? What was it that caused the White House, the Federal Reserve Board of Governors, the Kansas City Fed, and the majority whip of the US Senate to attack a business that wasn't even operating yet? That's an interesting question. It does indicate, frankly, how afraid they are of this technology.
It's time for a quick break to hear these messages from my partners. First up, iTrustCapital. iTrustCapital lets you invest in Bitcoin for your retirement with the tax benefits of an IRA. You can defer taxes on gains using a crypto IRA, or with a Roth IRA, you can withdraw tax-free at retirement. And here are some important things to know given the recent crypto contagion. iTrust does not lend against client assets. iTrust accounts are also FDIC insured up to $250,000 US, and iTrust does not hold customer assets or money. Assets are actually held between Coinbase custody and a custody platform called Fireblocks. And Fireblocks, by the way, underlies pretty much the entire industry. Their multi-party computation technology is the gold standard of custody for institutions and allows for private keys to be separated, encrypted, and shared across multiple parties in cold storage. So if you're doing retirement planning and considering adding Bitcoin to your IRA portfolio, you can sign up for an account and get a $100 bonus at itrust.capital/Natalie Brunell. All right, next up, Bitcoin Conference 2023. This is the ultimate Bitcoin event every year, and it's going to be held once again in Miami Beach, May 18th through the 20th. Last year, there were about 30,000 attendees, and it's hard to believe the scale until you see it in person. There are incredible speaking sessions featuring the world's biggest Bitcoin voices, networking events, games, parties, and of course, Soundfest. I actually credit my career transition to the Bitcoin conference because I went for the first time in 2021, and that's where I dropped my first episodes of Coin Stories, not expecting this to become my full-time job at all, but just hoping to meet Bitcoiners and find more guests for the show. I actually went up to people like Michael Saylor backstage with a business card, and that's how I got him to come on the show. So anything can happen there, especially if you dream of working in the industry. Ticket prices go up every month until May, so don't miss out. And for 10% off, use the code HODL at b.tc/conference. I'll see you there.
It does indicate, frankly, how afraid they are of this technology. What's so interesting, though, as you point out, is that I was trying to help them absolutely both in coming through the front door publicly warning about the risk, but privately behind the scenes trying to help. And the messenger got shot here. It's quite a story, but it's not over yet. We have a long way to go.
I know that there's going to be more that's revealed, but I want to dig into this whole thing a little bit deeper. Why were you rejected? I mean, what can you tell us? I know there are things that are going to come out slowly but surely, but you have filed a lawsuit. I mean, what happened here that you can share?
Well, we filed the lawsuit in June. That's public information, and obviously I can't comment on that. The rejection came in January, and the reason given was safety and soundness risks related to our activities involving crypto assets. Well, it's interesting to learn that 136 banks were involved in that, and suddenly Custodia Bank is rejected for our risks involving crypto assets when we were the low risk alternative, right? We just learned this morning the liquidity risk policy that they're applying. Custodia already complied with it in spades. So I think we don't fully know all of it yet. Washington, D.C. is a sieve. I will say that. And a number of folks have come to us on both sides of the aisle and shared with us what they know about what happened. And all I will say is that as it all comes out, this could be explosive. Custodia was a sacrificial lamb for things that were caught up. We were caught up in something so much bigger than just ourselves. Does it absolutely have something to do with the independence of the Federal Reserve from the White House? Yes, from what we know. And then, of course, the independence of the reserve banks from the Board of Governors in Washington, D.C. within the Federal Reserve System? Yes, from what we know. And let's see if, as it all comes out, this is going to be an interesting watch. But if you think about the history of the banking system and the federalization of banking, it wasn't always that way. And
states were sovereign.
Historically had the power. Exactly. And here a state worked, by the way, with the Kansas City Federal Reserve. Senator Lummis from Wyoming revealed that there were more than 100 meetings. I was not in any of those, but there were more than 100 meetings between the Kansas City Federal Reserve and the state of Wyoming, creating this new type of bank charter. So Wyoming did not go off rogue. Wyoming absolutely worked with the Kansas City Federal Reserve, and then it was DC that stepped in and put the kibosh on it. And so now we're back to this whole question of what's really going on here. What is happening in Washington, D.C.? Is the banking industry really under control of unelected bureaucrats in Washington, D.C. who are injecting politics into banking? Or do the states have the authority to charter banks as they always have had since essentially the beginning of U.S. history?
Why are the feds so threatened, Caitlin?
Oh, that's the question. I don't know. It's so interesting because, one of the Washington folks used the phrase, they shot the stallion to scatter the herd. And that's why they went after you, because we were the one that was coming, Custodia Bank, the one that was coming in through the front door, telling them from the get-go, we won't do anything without your express permission. And I don't know why they were so threatened by that, but by having us be the example, the stallion that scattered the herd, so to speak, they chose us for a reason. And we do have, from some of the folks who have come to us to tell us what really happened, we do have a very good sense. And I wish I could share it all, but it will all come out in due time, whether it comes out through journalists asking the right questions, whether it comes out through congressional oversight, or whether it comes out through a judicial process. I would say that it is very important that this story does come out.
At the end of the day, do you think that this is really about maintaining that dollar dominance? And so they see this emerging ecosystem that, it's essentially out of their hands, out of their control. Most people don't even understand the technology who are in Washington, D.C., and maybe they think it's sort of chaotic in a sense, and they need to wrap their hands around it now before it grows way too large in terms of market cap and adoption. I mean, do you think that ultimately they're worried because they see this as obfuscating the bureaucrats and the power of the dollar?
Well, sure. Although what was so interesting is that Custodia presented them with an opportunity to harness some power over it. And the purists in the Bitcoin world, of course, don't like that and would wonder, why on earth, Caitlin, are you spending your time building Custodia Bank. Let's just go work on Bitcoin. It's code. We don't need a bank. That's not even the short term, though, because of course we need connectivity points between the old and new systems. And again, I very much was trying to create the connectivity point in our company that was safe and sound for both. And so ultimately, though, I think where you're going is interesting. A lot of folks have asked the question, is there something bigger here? Because the White House and this coordinated agency action in Washington in the last 3 weeks has gone after all the private stablecoin issuers. And Custodia Bank had the patent on being a bank that took in a US dollar deposit and turned around and issued a token on a blockchain to tokenize that US dollar deposit.
Wow.
In other words, to allow the US dollars overtly issued by a bank, again, with permission only, to trade on a blockchain. And so is that one of the reasons why they shot the proverbial stallion first? Because we were the closest to being able to issue a dollar on a blockchain. And the Fed, as a bank, the Fed actually on January 27th, when it announced that it had denied Custodia's membership application, it released guidance that essentially said, we don't want the banks doing this. That was a question. Remember I said the Custodia asked for permission for everything we did? We got the answer at the same time as we got the denial. So, all right, great. We got the denial. You don't want us to do this. Okay, fine. We'll jettison that out of our business plan and resubmit, which is what we did. But it does raise an interesting question. Is there something bigger going on? Is the Biden administration moving against private stablecoin issuers alongside the Fed because they want to issue a private version themselves? I have heard that. I think there are some breadcrumbs, like, for example, the Fed put out several job descriptions for engineers to work on a retail central bank digital currency, a la what China has. And there are people in the administration that I've heard are pro retail central bank digital currency. There are job movements that are happening that do indicate that might be it. But here's what I will say. I'm not there yet. I don't have the proof for that. And I'm not ready to conclude that was what was going on. And until we know for sure that was what was going on, I wouldn't go that far. It is a question worth asking because, of course, there are people by the way, there were people in the Trump administration too. This is not political. It doesn't cut across party lines, but there are both pro and anti-crypto people in the Biden administration. And the anti-crypto wing of the Biden administration, which clearly is in control of the policy at the moment, is apparently pro retail CBDC. And will they be able to pull it off? I don't know. We'll have to sit and watch.
Well, I share a lot of your suspicions, Caitlin. I think that, they have this monopoly over money via the US dollar. And if there's going to be a digital dollar, they want to have as much control and say over it as possible. And I know that you've talked about really the importance of stable coins in the past as sort of this hybrid, because a transition to a new monetary system, we don't want it to be chaotic and unstable.
Correct.
We want it to be as smooth and peaceful as possible, as people kind of opt out of the old one and into the new one without this massive shift and, deflationary bust depression that so many people would understandably fear. Zooming out a little bit, just with regards to all that we're seeing in this new year with the SEC, like you mentioned, stable coins, and they're going after these different platforms. We just saw news about the Binance and Voyager acquisition. What do you want people to know who, maybe are working in whatever industry they're in, but they want to opt into this system and also make sure that their money is secure and know that the on and off ramps are going to be something that they can rely on? What's the most important takeaway and message with everything that's happening right now? And maybe it's advocacy and calling their elected officials.
It certainly is advocacy. This industry, what Congress learned when the Yellen Treasury Department made a move against crypto to require all transactions to be taxed. The Yellen Treasury Department watched as all of us honey badgers out there and by the way, we exist in every single congressional district, and literally millions of people started making phone calls to their representatives on Capitol Hill, and it succeeded in pushing back a real aggressive move against crypto at the time. And so we're not quite ready to remobilize that army of people yet, but it's coming. That moment is coming. But certainly, by all means, if you're not vocal, that's the easiest thing for you to be right now, is vocal with your representatives that you don't agree with this move against crypto, but because it is pushing it into the shadows. So coming back to your question, what's going to end up happening here? We don't know yet the extent of this anti-crypto move. Is it really designed de facto to sever the ties, as the White House January 27th statement seemingly makes it so, to say we don't want any connectivity between the existing system and the new one? If that's the case, then it really will all go offshore. Your point is well taken. You can get US dollars offshore, and the whole thing ends up in the shadows. Or do they really just want it to be done by a small number of large incumbent institutions? That's the question. It really kind of boils down to that right now, given the activity against Custodia. However, if it's the former, this is the interesting point. They will continue to play whack-a-mole, because it will continue, they being the bank regulators, it will continue to pop up these indirect exposures that showed up in places like Federal Home Loan Bank advances and the broker deposit markets. None of these things anyone thought at the time crypto had any connectivity to, and suddenly crypto's popping up and causing problems in these parts of the financial system. So in some ways, if the organization, any organization, makes a decision out of fear, they tend to get what they feared. And so ultimately, the implication of your question is, by pushing all of this US dollar activity into the hands of the 8 billion people in the world, instead of keeping it in the regulated perimeter, it accelerates the loss of control by the bank regulators in the United States. I don't understand how they don't see that. Because ultimately, if you step back and think about technology, right, most of us don't use the command line interface and Tor to navigate the internet. Okay, most of us use an ISP and a browser.
Yeah.
Most of us don't, host our own hardware, et cetera. Another analogy: most of us use a telephone company as opposed to using the command line interface to make an internet call over voice over internet protocol. Most of us don't use taxis in cities anymore. We use Uber. Okay, so what is it? But by the way, we could probably call an Uber with a command line interface as well, right? Where am I going with all this? You have lit and dark markets in all parts of the internet. The internet is just code. It's just speech. But most of the internet traffic goes through these lit markets, goes through centralized points. The purists would say that creates the monsters like the Twitters and the Facebooks who were canceling people. And thank goodness we have the internet so we can go around them. And let's work on decentralized platforms like Nostr to be able to never have concentrations of power like that. Right. However, the vast majority of people will not use those decentralized platforms. The vast majority of people want a trusted platform. Why? Because it's regulated and because it provides an easier user interface. Even software developers are still using, Verizon or AT&T or T-Mobile to make their phone calls, right? And it's just not as easy to use the dark web and to do these things from code. However, the fact that code exists is enormously freeing, and you can create decentralized versions. So where's the point I'm trying to make? The right regulatory policy is to have most of this done in the regulated lit markets. That's where most people are going to be more comfortable operating. That's where most activity is going to naturally migrate. We've seen it in so many of these other examples, from the internet itself to telephone calls to Uber. We've seen it in all of these examples. And we will see it in finance as well. I fear that what the bank regulators just did, though, is push all of this into the shadows. That's going to only accelerate its development, and it's going to accelerate the bank regulators losing control over it. It doesn't make sense.
Well, this makes me think about what you recently wrote regarding mutual funds and the history of FDR with Paul Cabot. Can you touch on that a little bit? Because it seems like there are some parallels here.
Sure. And I'm very grateful to the Cabot family. There were two Cabot family members who contacted me to say, I saw a parallel in you to
Wow.
our uncle. So to be clear, I'm not making the comparison they did, and I am honored and can only aspire to a fraction of his success. But what he did, he's the founder of State Street, the big bank in Boston. And he was the father of mutual funds. He was a Boston Brahmin Republican who rolled up sleeves with FDR, the ultimate Democrat, and they worked together to clean up what I didn't fully understand in the history was rampant fraud and corruption in the mutual fund industry. And FDR originally in the New Deal era wanted to ban the mutual fund industry by taxing and regulating it out of existence. Does that sound familiar?
Yeah.
Right, exactly. And what happened was Paul Cabot, because he was calling out the bad behavior of his competitors, and he was trying to create a regulatory structure, which ultimately culminated in the Investment Company Act of 1940. That's something that created an unbelievably strong foundation for the mutual fund industry to thrive in a lit and lawful and ethical way. Mm-hmm. And he had the credibility to get into the to the Oval Office and sit down with FDR to work it out, because he was calling out the bad behavior of his peers, and he was trying to help law enforcement clean up the corruption. Does that sound like it's familiar? But what's fascinating, though, is back then, if you read the history, and it's a great story, there's a book written about it. If you read the history, what happened was that FDR was innovation. The business of America is business.
Yeah.
That's not what the Biden administration is doing. He's no FDR. He could be. He could say, all right, there are a few people who emerged from the ashes of the crypto crash of 2022 with their reputations intact, maybe arguably enhanced. And let's get those few new faces, not the crypto bros that he and Powell and Gensler were meeting with, like Sam Bankman-Fried, but get the real folks who were buried in the bureaucracy and who weren't listened to and who were doing all of this right. And let's roll up sleeves and get something done to enable this technology to have a regulatory pathway within the United States. That is how the existing regulators will not lose control over it. What they're doing in the short term is tremendously short-sighted, and history will not be kind if they do prevail.
All right, it's time for another short break to hear these messages from my partners. First up, Fold. Fold is the best Bitcoin rewards debit card and shopping app in the world. You can earn Bitcoin on everything you purchase, from Amazon to groceries to sprucing up your wardrobe, with Fold's Bitcoin cashback debit card. And you can win free Satoshis every day, or even play for the chance to win a whole Bitcoin by spinning the daily wheel and the purchase rewards wheel. I have an alarm set every day so I don't miss out on spinning the wheel and earning free sats. And it's also a great app to get someone that is totally new to Bitcoin. So if you want to join the fun, head to foldapp.com/Natalie and get 10,000 in free sats when you sign up. And finally, I'm excited to partner with CrowdHealth, a Bitcoin alternative to health insurance. Health insurance costs can be sky high today, and you essentially send money every month to a massive corporation, the health insurance black hole, as I call it. And if you don't need any health care, you never see that money again, right? But if you do need to go to a doctor, you end up having to pay even more out of pocket, especially if you end up as one of the 20% of claims on average that aren't covered. With CrowdHealth, you pay a small monthly fee that goes into an account that you actually accrue over time and is yours to use or keep if you ever leave. You can even save that money in Bitcoin. CrowdHealth is all about community, and the community crowdfunds everyone's healthcare. So if something does happen or you have a doctor visit, CrowdHealth will negotiate down the medical bill much lower than what insurance would be, and then the community helps you cover it. And in return, you help others cover their needs. For more information, you can head to joincrowdhealth.com/Natalie. And if you use promo code Natalie, you get 6 months for $99. All right, back to the show. Caitlin, there are a lot of people that I have met through the Bitcoin space who are very, anti-government and say we don't want regulation at all. As little as possible. Let's end. There's a movement to end the Fed. Can you talk to maybe those members of the audience who say, why do we want regulation at all? And to your point earlier, that this is code. So, shouldn't we be advocating for no regulation of this space at all? While others, we hear from say we actually do need a framework and a roadmap, and we want this to be done in an ethical way. Policymakers should be involved. Can you, maybe offer your take on that?
That's a great question. And I'm asked it a lot. And I'll go back to one of the original, the OGs, original gangsters of Bitcoin, Trace Mayer, who had a great phrase and who helped with the Wyoming blockchain work in 2018. Wyoming was the first state to create a legal and regulatory regime that clarified the legal status of digital assets as property. And Wyoming defined the commercial law status of digital asset transactions so that parties to the transaction understood what the rights and obligations to each other were. All of those things were necessary, as Trace said, to make the technology backwards compatible with the law. None of us live in anarchic societies unless you're a seasteader who never touches shore. We all live in under legal regimes, and if the technology gets too apart from the legal regime is an attack vector on the technology, and indeed we're seeing that. So one of the most important things is to have the legal regime and the technology work together in a symbiotic way. Now, the next piece of this is that the technology obviously has gone way far in certain parts of it outside of the legal system, and I have indicated sympathy with some of the things that the SEC in particular has done to try to protect investors, because what you see is that into the vacuum filled scammers, criminals, and incredibly leveraged business models that should never have been allowed to exist. And the markets have been vicious in burning that all down, and good riddance to it all. So then the next question becomes, all right, what's the answer? If in the absence of regulation, we see the worst of humanity take advantage of other human beings, then how do we get from where we are today to a hyper Bitcoinized world that the purists would like? And here's my answer. We need to build the infrastructure first, and we're building it. But you alluded to it earlier, Natalie, when you asked the question about, we don't want a deflationary transition to this new world. I don't want Bitcoin to hurt the traditional financial system, and I don't want the traditional financial system to hurt Bitcoin. These two things should be able to work together as they both grow. And frankly, this technology, ultimately, people will be voting with their feet, but not in a way that triggers a deflationary bank run situation on the existing traditional financial system, which, as you pointed out earlier, in aggregate is insolvent. It's been that way always. And so we that's why we don't want the bank runs. We don't want to trigger the bank runs. No, what we want is a stable transition to the new world. And that is what I'm working on. And the best analogy I can give is a relative drove up from Denver, which is 90 miles from where we live here in southeastern Wyoming, and had an electric vehicle and checked to be sure there was a supercharger because they were running low on charge. And guess what? When they got here, the supercharger was broken. Okay. It took them 14 hours on a trickle charge to charge that battery enough to drive 90 miles. What's the lesson from that? If you don't have the infrastructure built, the concept is great, but in reality, it doesn't work for people. You've got to build that infrastructure. We really have to be focused on building the network effects. I am hugely optimistic about Bitcoin and Lightning Network in particular as these network effects propagate. But we've still got a lot of work to do. All of us know this. And it's going to take time, and we're not ready. And I hope we don't get hyper Bitcoinization tomorrow, because it would not be a good situation for most people on planet Earth. I would much rather see that transition happen steadily and carefully as the infrastructure in the new digital asset ecosystem is built up to be able to handle the demand that we know will be coming our way.
Right. And so essentially Custodia was just trying to plug in, right? I mean, so all of these, there are connection points and outlets, and you were trying to plug in a legal, regulated, transparent, fully backed way. And just to
Fully
clarify,
permissioned as well. Yes.
just to clarify, Caitlin, when you brought up all these banks that were essentially operating in the shadows and some of them attached to FTX and accused of now wire fraud, they also were they applying to have the same federal recognition that you were, or were they operating essentially illegally? I mean, you mentioned you haven't taken a deposit, right? So these essentially
Correct.
just skipped over that step instead of waiting for the application to be approved. They just went and operated.
So here's part of the soft corruption of the system as it's structured. All of them already had Fed master accounts. They were already operating as banks, which means they already had Fed master accounts.
Got it.
So what's interesting is that the incumbents get advantages that startups do not.
Wow.
And as a result, the bar is higher for a startup. It is not legal, frankly, for that to be the case, and there will be challenges to that. But boy, oh boy, the incumbents were favored by the regulators for sure. And the irony is they got it exactly backwards. The few startups who were coming through the front door asking for permission, like Custodia, we knew what we were doing in this industry. We spotted the liquidity risk that the regulators are now trying to plug the holes for. We spotted who were the good actors and who were the bad actors. We were not easy marks for the criminals of this industry. And unfortunately, of those 136 banks, I'll bet you most of them were small community banks who were just deposit starved and frankly turned out, unfortunately, to be easy marks for the criminals in this industry. Not everybody's a criminal, but certainly we know many of them were. And if you didn't have the people on staff who really knew how to separate the wheat from the chaff, then look what happened. As you said, 11 of them in the FDIC's Inspector General report may have been involved in wire fraud. 11 banks involved in wire fraud. Now, here's again the interesting point: the exact opposite conclusions are being drawn from those that they should be drawing. They should want folks who knew what we were doing and who were warning and who did understand how to separate the wheat from the chaff. And instead, what they've done is shove us all out.
You know, in our last conversation, Caitlin, you mentioned Signature and Silvergate. At the time, you said that we owe a debt to them because they serve the crypto industry. They were one of few. Since then, you know, some questions have emerged about some of these entities that are the intermediary between crypto and the traditional system. Yes. Do you have any, you know, updates or takes on the other banks that are in this ecosystem?
You know, it's interesting when you asked about in our past interview, we were still Avanti. That was a year ago or so, yeah. Right? And so what has come out since then is multiple class action lawsuits. Obviously, I don't have direct knowledge at all, so I can't speak to the veracity of the claims that have been made. But the claims that have been made are pretty incredible about potentially the banks. And it ties into this FDIC observation that 11 different banks were potentially involved in wire fraud because of what has come out is a number of customers have said, we intended our wires to be sent to FTX and they went to Alameda instead. And the banks, both of the two you named, although it appears there are 9 others, if there are a total of 11, have had the wool pulled over their heads by the scammers of this industry and didn't understand where were the new frauds that were going to be coming in and who are the good actors. How do you separate the wheat from the chaff? And it is unfortunate, again, because so much of the many of the lessons that the bank regulators appear to be drawing are the exact opposite ones that they should be drawing.
Yeah, it's really interesting because you mentioned this in your post that regulators were charmed by SBF, and suddenly what an about face that they're coming down so hard on the good actors in the industry when they really they essentially tried to befriend the villain. I mean, it's just
yes.
Yeah, it's crazy to see. I mean, what can people expect to happen next? Because again, this sort of it puts a spotlight on the fact that we really do need these on-ramps right now between fiat and Bitcoin. I know there are people who, just as they advocate for much less government and maybe the end of the Fed, they also say we can just operate on a Bitcoin standard. You know, we don't need any of the other entities. But the reality is that for at least several decades to come, we do need, you know, the systems to sort of coexist, even if we are to move to a total Bitcoin standard, right? So what do you want? What do you want people to know? Where are sort of the risks, and why are you? I'm assuming you're hopeful that this is all going to move in the right direction.
Oh, I do believe cooler heads will prevail because, and again, some of it is what we know from the DC Civ that has told us what really happened. There are factions that are fighting each other within the Biden White House, and the Fed is all part of this. I don't understand why. Well, I have some sense why, but again, the Fed is supposed to be independent and is part of this group. And so, but again, there are factions within the Fed. There are factions within the SEC. There are factions within the FDIC too. These are not monoliths, and it just happened that the anti-crypto faction, proverbially, as Washington D.C. likes to say, didn't want to let a good crisis go to waste and made a very aggressive move. But that pendulum is going to swing back, and I do believe cooler heads are going to prevail because there are a number of folks who really do understand that they do want this stuff in the regulatory perimeter, and the good actors like us who were coming to them asking to be federally regulated, begging to be federally regulated, and trying to help them understand they were dealing with something that was new, and we were willing to roll up sleeves and teach them where the risks were. You know, we saw what happened, but it's not over yet. It's not over yet for us. Stay tuned. We are looking at alternatives. We've had a number of banks, and I've got to say thank you to the bankers who have reached out to us. A number of banks are sympathetic to what's happened. They want to draft behind us. They know it's really hard for banks to sue their regulators, but they've been watching as the federal bank regulators have been overreaching for years. And they're cheering us on. They can't say it publicly, but they're cheering us on, and they're offering to help. And so stay tuned, because we've had multiple banks reach out offering to help and may be able to help us clear US dollars for our customers. But stay tuned also. It's not over with the Fed yet. It's far from over. As you know, we have multiple angles with the Fed that remain open, including an appeal on our application, including the lawsuit, and just including ongoing conversations. Because again, cooler heads, I think, will prevail. This whole thing, there are a lot of theatrics that were done here, orchestrated by the White House and Fed. And all right, you sent the message to the industry, got it. Everyone in the industry saw it. They saw the stallion get shot to scatter the herd, proverbially. And all right, now let's regroup and roll up sleeves and actually get something done.
As we start to wrap up, I really want to touch on this idea of Bitcoin becoming a global reserve asset, because I know that you feel very confident that it will, but yet you also say that the dollar will remain. 80% of world transactions are done in the US dollar still. However, we are seeing shifts, right? Parallel systems that are being built by different countries, a de-dollarization over the last few years, especially in response to things like sanctions and the fact that we are just continually going further and further into debt. So why would someone hold our debt in their reserves? But can you talk a little bit about sort of how you see this all playing out? Because some people think it's a zero-sum game, and it's either like a Bitcoin world or nothing. Others say that these assets will kind of coexist. We will still have the dollar. Other fiat currencies will collapse into the dollar. How do you see this playing out? I mean, maybe just if you could zoom out and give us a general take. I know it could probably not manifest for decades, but how do you see this happening?
Well, it might manifest tomorrow, or it might not manifest for decades, right? And you and I talked earlier about, we kind of hope it doesn't manifest tomorrow, because Bitcoin's not ready yet. We want Bitcoin to be ready when it does manifest. And I think that's a gradual process of infrastructure build and network effect propagation. But it's all geopolitical. That's the answer. We're moving into a multipolar world. And yes, you're right. I haven't spoken out much against the weaponization of the US dollar system, but it's perfectly foreseeable that if the US dollar system can only be used by friends, then the foes will try to figure out a way to move value outside of it. And that's exactly what's happening now. How much of that is really meaningful, and does it really matter? At the moment, it's not that meaningful. But if you go back in history, again, history always gives you good lessons. The offshore US dollar market was created in the 1950s during the Cold War because Russia, thanks to OPEC's decision to sell oil only in US dollars, it's a US dollar market, and Russia had to put its US dollars somewhere and use those US dollars, but due to the Cold War, they were shut out of the US banking system. So what happened? The British banks said, well, we'll open US dollar accounts for you. We don't need permission from the United States to do this. And thus was born the euro dollar market, the offshore dollar market. It's a misnomer, but that's what it is. Right. You can get US dollars offshore, never touching the US banks. Now, ultimately, if you're going to ever redeem those US dollars, everything ultimately has to settle back through the Federal Reserve, which is why it still has the power that it has. But most of those US dollars that circulate offshore never end up coming back onshore into the United States. And the bank regulators lost control of the Eurodollar market. They were able to gather some of it back through the Bank for International Settlements and these multi-country organizations that, including the IMF and World Bank, that basically are dollarized systems and brought power back. Because the countries cooperated with each other, and the US wielded its power in terms of access to ultimately redeeming those US dollars if the banks in those other countries, including Western European countries, were adhering to the multilateral rules. Okay, so that's essentially describing the multilateral system. But you are seeing people break ranks here. You are seeing countries break ranks. And I think that that's just a function of the fact that the U.S. is not the 10-ton gorilla, the only global power that it used to be. We're seeing multilateral, more regional powers pop up, and they're creating their own settlement systems for settling transactions outside of the U.S. dollar. And frankly, the U.S., if it really wants to keep its strength, needs to focus not on keeping the strength of the U.S. dollar, but needs to focus on keeping the strength of the U.S. economy. Yep. Because ultimately, what is fiat currency? It is essentially the balance sheet and the future productive capacity of every person and every piece of capital. By that, I mean like a capital equipment in the country. Yes. Okay. So it's a confidence game. And if you really do start to see the productivity of the people eroding for demographic reasons, or because the people stop working, et cetera, or their health goes down, right? Then it's going to have an impact on the currency. And so these things matter. These macro megatrends matter, and the currency is reflecting all of them. And if the U.S. wants to retain its power in the world, it needs to ensure that it retains its power through the U.S. dollar, and frankly, employing these new technologies for the U.S. dollar, as Nick Carter says, are some of the smartest things the U.S. could be doing in order to extend the supremacy of the US dollar as reserve currency. And what are the bank regulators doing? They're doing the opposite. Again, we're acting out of fear, potentially ultimately gets them the very thing that they feared.
Right. We need a Bitcoin strategy. And to quote my last guest, Natalie Smolensky, we need to strategically acquire Bitcoin to return us to a sound commodity money, so that we can maybe reestablish our creditor status. We can maybe bring industry back, because that's really what allows us to have the capital to invest in future productivity and in future prosperity, which we haven't had. And we just have a bunch of fat cat bureaucrats who are telling people what to do, and they want to maintain their grip on their monopoly over money. And at the same time, they've hollowed out this country, and people feel like they can't even afford their kids, college education or their house. I mean, it's awful what's happening when you really zoom out at the macro level and these secular shifts. It's the law of physics. There are consequences to these actions. We can't just take our privilege and continue to, fight proxy wars and just tell everyone that it's going to be the way the US wants. Unfortunately, technology is going to make it that the chickens are going to come home to roost. And hopefully we have smart policymakers that adopt Bitcoin, right?
Right. Well, read up about the Triffin Dilemma. Everything you just laid out, Natalie, is exactly what Triffin, the French economist, predicted would happen when
Yeah.
When the U.S. went off the last vestige of the gold standard in 1971 right. and became a fiat-based world reserve currency. Right. It was inevitable that it was going to hollow out the manufacturing capability of the United States, that our economy was going to become financialized. But you know what's fun is all this financialization of the crypto industry that was done by ex-Wall Streeters, some of the worst, of the abusers on Wall Street. So Izzy Kaminska wrote a piece. Why is it that the ETF traders were the ones that, always had these big blow-ups on Wall Street? Well, guess what? Sam Bankman-Fried was an ETF trader, okay? Why is it that these folks brought their financialization alchemy to crypto, thinking that it was going to work in an asset class where there is no lender of last resort?
Right.
And there is nobody to bail them out when they blow up.
Exactly.
And guess what? There wasn't. And good riddance to all of them. I hope they learned their lesson. It was inevitable. All this was easily foreseeable by people who knew what they were doing.
Well, it was inevitable. Our last episode was actually called Bitcoin is Inevitable, which I still think it is. Any just final thoughts that you want to leave people with? It sounds like we are going to be watching for more that's going to be revealed in your situation. Hopefully, people will stand up and call their elected officials and make sure that going forward, these folks in Washington are held accountable and, stop trusting people that are just willing to put money in their pockets, especially when it's based on counterfeit money.
Yeah, in the coming weeks and months, so much more will come out. We didn't ask for this fight. We've looked at off ramps at every turn. We're trying literally to do the right thing and get permission for the right reasons and educate. And I will just reiterate really two things. First of all, thank you to everyone in this community who's reached out with offers of support. I will be calling on you soon. Stay tuned. And thank you again for all of your outreach. It's been really heartwarming in a disappointing and tough several weeks for us as a company. But I'll end by reiterating the call that I made in the blog posts that said shame on Washington, D.C. for shooting someone who was the messenger trying to warn of the crypto debacle. I am happy still, despite everything that all the ton of bricks that have been brought down on Custodia, I'm happy to come back to the table and say, put me at the table with the real decision makers this time. Let's not stick to the folks on the ground. Clearly, the messages either didn't make it to the top or were ignored. Mm-hmm. I was never at the president's working group table. So it's kind of funny. I don't know how the White House ever even knew who Custodia was. They've never met me. But nonetheless, I would, in the spirit of what Paul Cabot achieved, I would like to try to achieve that. There is something to be done here that comports with an approach of basic respect for property rights and rule of law. And boy, have I not seen that some of the things that have happened to Custodia make me question, does rule of law in this country still exist? Is due process still something guaranteed by our Constitution? Those are the questions that will be answered as folks look at what happens with the Custodia story over the coming weeks and months. Thanks again.
Yeah, well, we will certainly be watching it. And Caitlin, you made me think of something because, as this is all playing out and really there is this bigger question of the politicization, the federalization of this entire system, this overreach potentially, and how much the White House is involved. Maybe for people who are listening who say, well, if there's a bank who's doing business with criminals or maybe they're very passionate on the gun legislation issue, whatever it may be, and they say, I don't mind the idea of those arteries being cut off so that everybody's safer and more secure. What do you say to maybe that argument? Because it is sort of that ultimate question of freedom versus centralization.
It's a great question because there are authoritarians on both sides of the aisle. We've seen it in the attempts to deplatform people from social media. It comes from both sides of the political spectrum. And folks, freedom matters. Those sorts of avenues should never be politicized. And so the question becomes, if you think it's okay for those in power to do that against the types of industries, to debank the types of industries that you don't approve of, wait until you're on the receiving end,
Mm-hmm.
because the power pendulum shifts and suddenly you're the one who's starting to lose your bank accounts, and the industries you care about start to get debanked.
Mm-hmm.
This is not a political issue. And again, I reject the attempt to politicize this by the White House, the Federal Reserve Board of Governors, the Kansas City Federal Reserve, and Senator Durbin, coming after a lawful applicant who was owed due process and who did nothing wrong, and who tried to help all of you behind the scenes ensure that the things that actually happened didn't transpire. It's time to wake up, folks, and realize that this power is being abused. And if it's abused against folks that you don't like right now, it might be abused against you at some point in the future too. And it shouldn't be abused by anybody.
Well said, Caitlin. Wake up, Washington, and wake up to all of us, the people. We need to remember that we have the numbers. We have the power. We need to take it back.
We do.
So thanks so much,
Indeed.
Caitlin. This was just a pleasure.
Always. Good to see you again.
Thank you so much for checking out this show. Again, make sure you're subscribed so you don't miss out on any new content. And I love to hear your feedback. Leave a comment or send me an email at natalie@talkingbitcoin.com. Let me know what you think, if you have guest suggestions, and I'll see you next time.